Vincenzo'S Go Crypto Investing this October the 11th, 2025. And something that the article that I was talking about yesterday, after we had the biggest liquidation in Bitcoin and cryptocurrencies history, which isn't to be surprised when you have big liquidation events like a 50% altcoin dump in the matter of a few hours, and Bitcoin and Ethereum dumping 8 to 20% at the current price where you're at, right? If we ever get up to 250 grand and we have the same thing today, it'll be a new record. But something that I wanted to talk about was early Bitcoin whales shorted 1.1 billion right before tariffs, now up 27 million. How did he know? It's very interesting, right? And I seen that article yesterday as the price was starting to fall, but nowhere near where it came down to its low as Satoshi era. And this is a OG original era Bitcoin when Bitcoin was at 20 cents, right? Nobody knew about it. Satoshi era Bitcoin whale opened a 1.1 billion in short position against BTC and Ethereum just before President Trump announced a 100% tariff on China imports, generating an estimate 27 million in unrealized profits as markets crashed. Uh, Trader identified by blockchain tracking firm as Bit OG, who held 86,000 BTC from 2011. Uh, deposited funds into Hyperliquid starting October 9th to establish highly leveraged bets against the crypto market, top two assets. As the market dropped, this 1.1 billion short position is now sitting on an unrealized profit of 27 million. Whale dumped down 30 minutes before Trump's speech. The whale position included a 10x leverage short position, a 6189 BTC valued at 750 or three-quarters of $1 billion, with a liquidation price of 130,810 and a 12x short position, 81,203 ETH worth 350.1 million with a liquidation price of 45.89. The timing sparked widespread speculation about inside knowledge, with the trader doubling down on shorts just 30 minutes before Trump tariff announcement that sent Bitcoin plunging from about 122 to 102, according to the on-chain uh, metric. The whale, approximately 90% of Bitcoin shorts and completely exited Ethereum position at the bottom of the drop, pocketing between 190 and 200 million in unrealized profits within a single day. In case you didn't know, BTC well closed 90% of his BTC short and fully closed his Ethereum short, making 190 to 200 million profit in just one day on hyper liquid. The crazy part is, uh, lock data trader began accumulating the short position on October 9th by depositing 80 million USD into Hyperliquid, followed by an additional deposit totaling tens of millions throughout. Although liquid funds floated around is fake, the real number is likely much higher, 3.4 billion. Long positions accounted for 16.83 billion of losses, while shorts contributed to 2.49 billion. Bitcoin, Ethereum led liquidations at 5.38. Now, here's what I want to say. How how would this guy with a 10x leverage with that much money? It wasn't like he was playing with pocket change. With 10x leverage, the price didn't have to go up that much to get liquidated or have to deposit more money. And he happens to place it at just the right time, right? I call bullshit. I call manipulation. I call insider trading, right? And I call a bunch of shenanigans just took place. Uh, so that's very interesting, and that's what I was talking to you about. I was talking to you about yesterday. We were looking at on today the Bitcoin price. Everything's just kind of stabilizing. The percentage is up and down today don't look as bad because it started from about where we're at now. You can see the Bitcoin price did come up to the 100-day moving average in the daily time frame. You can see that because we got supported beautifully on the 107,000. So now what you would kind of expect as the market kind of calms down, in the Bitcoin price at least, is maybe start to settle along the 200-day moving average, right? So if you hold the 200-day moving average, you would look to try to stable the ship and maybe look to come back towards the 126. But on the other thing, that breakout came with what could be a confirmed breakdown, because you not only had a massive price breach where you went down by uh 10-15% on the breakdown, but you had a big volume spike. Is this signaling we're coming down to $95,000 and potentially a little bit lower, $79,000 next? This is all to be determined, because one of the big things is this all happened conveniently enough right at the end of the day when the futures markets, where all these ETFs and most of the crypto money is in now, were shut down. So it's going to be interesting tomorrow night when these ETFs start to open up. What happens? Do we start to get a sell off with the ETFs because uh, of what happened Friday night? And depending on how this weekend plays out, that's all to be determined. But if you stay above the 100, 200-day moving average, you can feel pretty confident that you should and potentially could run back up, maybe, and try to retag this major upper resistance. If you can't hold this 200-day moving average, you will be coming down over to here. uh, Scrolling through to the Ethereum price. One thing to note though, look what happened yesterday. Bitcoin dominance. The dominance spiked yesterday, obviously, when the altcoins are collapsing. You can see Ethereum collapsed all the way down to a major support level, which was the 200-day moving average, and it wicked on it exactly. Look at that. You couldn't have had a better wick to it. Hit the 35.25. Now the question is, can you reestablish above it's the same question for all these coins. Was this just a flash drop and we're going to rebuy back and get past where we were when the drop started and just be on our merry way? Or was that a structural change in the overall market? And we won't know for 4 to 6 weeks to see what ends up happening. But is that what just happened? We don't know. But what we do know in the short term in Ethereum is you would want to reestablish on the 100-day moving average and then get above the megaphone neckline support, which is now acting as resistance because you're underneath it, and then you could be safely bullish. On the contrary, if you can't reestablish what you're below right now, the 100-day moving average, and you're just above the 200-day, as you're tightening in this range, if you bleed south out of it and hit this major support level again, that's going to be your critical area in the short term. If you can hold that, you could bounce back up near uh, like if you did something like that, you could bounce back up really, really nicely, really, really quickly. But if this is a short-term change in the market, if you come down here after some dancing around and you slip that, this is your next underneath target. So that's very interesting to see what's going on. There's a lot of loose movement in a thin trading book now, as a lot of people got wiped out. So there's big spreads on the buy and sell on all of these coins right now. So it's very interesting times that we're in, very exciting times. You can see the XLM, another coin. Actually, look at where we broke all the way down to. We broke the 50, the 100, and the 200 there in red, the big left to right red, green, and blue. And the weekly time frame came all the way down to just above the 14-cent target, just below an 18-cent target that we've had and we've talked about a long time on the wick. Now the question is this just a flash wick, or are we going to, over the next several weeks, end up trading down to the liquidity pole, right? Because there's a big liquidity pole down there now. Are we going to pull ourselves down to that big? And that's the same thing in all these coins. Are we going to pull ourselves back down to that liquidity pole, at least to retest it or get close? Or was this just a big fake out, a big drain out, and we're going to be off to the races? And they were just shaking out all of the margin. They wanted all the margin for themselves, because anybody that was on any kind of margin was wiped out. If you were on longs on any of these coins, you were done. You would not have been able to survive that. Was that just a plan, or was that a structural change in the market and something that we should be very closely paying attention to? And that's something with Ethereum. You can see where you're sitting on now. You can see after the wick, look at it conveniently where you came down to for support, the bottom part of this green support and resistance box, an area that we've been talking about for several months as we've been trading back down from our recent pump. And then you can see we stabilized the first candle, and now the actual price is right on the 50-day in the weekly time frame, or the monthly time frame, and the bottom part of that green support and resistance box. So if you want to stay bullish down out this weekend, you want to stay on those two and continue up. That's bullish, right? Bearish is if you start dancing around here and slip the 50-day in the weekly and this green, the bottom part of the support and resistance box, because then you could force yourself, I know, as crazy as this sounds, all the way back down towards that 25 cents, which is about 35% to the downside, right? Same thing with the XRP. You came all the way down to, look at that, just above that support and resistance box to $1 exactly. And then you came up on support right on the 50-day moving average in the monthly time frame. And you can see what's like what we've been talking about on these other coins. If you want to get short-term bullish, and what we really need to do is look at this in the hour time frame, and that's what all these coins look like. If you want to get short-term bullish and you want to try to keep this uptrend going after this massive liquidation event that took place, is really what it was. It was a manipulated liquidation event, as far as I'm concerned. Um, you want to stay above this 50-day and the weekly, so you could come back down here and tag this. We can get rid of these now. This following channel we don't care about anymore. You can get back down there and hold that, and that's bullish, right? And you hold that, you can continue up, and then your next major move would be up here at this overhead horizontal resistance that we've been talking about forever, that used to be support. And you can even see on the flush, it even tried to hold it originally on the first candle, and then it couldn't hold it on the next hour candle, right? And it came down through, right? That would be your next upper resistance at 256. But just like XLM, if you can't hold this 50-day in the weekly, your next move would be down here to the candle body, which is down there near 209. And then if you couldn't hold that, you'd be looking at a run down towards the 100-day moving average in the monthly time frame at $1.77. And that's the same across the board. You can see algo is the same thing. It's coming back off its wick. It got almost back to 20 cents. It's initially getting rejected, but that's to be expected. Now what you want to see is, if you come down, do you hold the double bottom and then start to trade back up, right? And then you would reattack to 20 cents. If you don't, you would be looking at an underneath target, which we've been talking about prior to any of this happening, the 10-cent level, if you ever came back below that 20 cents, right? And this is the same across the board. Some of the ones that people care about are the DGB that I care about. You can see we bounced down the 5 cents. Very depressing. You have to hold this 5 cents because you don't even want me to show you underneath targets below that. You would have to zoom the price out. It would be probably be talking about near all-time lows if you can't hold that. You would be. That is your all-time low. So you right now, essentially, you've reached and made an all-time low. You did. You've created. Congratulations, everybody. DGB holders on that wick. It created a new all-time record low, and that is not a spot we want to go, because if we don't hold this 0.05 and that wick low, if we do come back down there, we're in price discovery, and price discovery in the wrong direction, and price discovery in the wrong direction could be signaling any money that's ever been invested at any price is a lost cause, and that's something that we have to pay attention to, because this is an emergency alert on DGB. We'll see what happens here, but we are safely back above that major all-time record low. It was just a flash wick liquidation. So we're currently going to have to continue to watch that, but that is something to note, that it was a record low. AMP almost flashed down to a new record low, and that's something that we have to pay attention to, because we might have been caught in, as you know, I'm not the most bullish in the crypto sphere, and I might have been shysted uh, if these coins continue to go down the next 2 years and don't go up next year like I anticipated them to do. But we have to continue to be fluent in the market. I am not the biggest investor in crypto, but any money that's in there, whether you make it or lose it, that is very exciting and very important either way, whether you're making money or losing money, whether you have $100 or $10 million. It's all very important, because it's all what you're trying to do. So you must continue to stay on top of things, continue to stay educated, and we're going to continue to follow this, track it for you on our way to becoming asset millionaires. Peace and love. I am not a financial advisor. The Rock Eyebrow J.